Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Wednesday, December 21st. U.S. stock futures are holding on to modest gains ahead of the open, following a huge rally yesterday. All three major averages surged about 3%, prompted by a much bigger than expected increase in home construction. The housing market will be back in focus later this morning, when the government releases its reading of November existing home sales. Stock futures and the markets overseas had been showing much bigger gains earlier this morning, after the European Central Bank announced a massive funding operation. The ECB offered to loan 489 billion euros to the region's banks, a much bigger figure than expected. 523 euro area banks are taking the central bank up on its offer, but there's no word yet on which institutions they are. The banks are trying to increase liquidity, and some analysts are suggesting that the ECB is encouraging the lenders to purchase government debt with the funds in an effort to combat the sovereign debt crisis. The loans are expected to expand the central bank's balance sheet by about 20% over the next 3 years. On the corporate front, two companies that reported their quarterly numbers after yesterday's closing bell are moving in opposite directions this morning. On the downside, we have Oracle, tumbling more than 10%. The software giant's earnings and sales results both fell short of Wall Street estimates. There were two main reasons for the miss. Oracle's new software license sales rose just 2% from a year earlier, versus earlier forecasts of 6 to 16% growth. And hardware sales fell by 14%, whereas the company had been expecting them to remain flat. But on the other side of the spectrum is Nike, up about 3% in the pre-market. The company's profit and revenue both topped expectations amid strong sales in North America, China, and emerging markets. But higher product costs continue to hurt Nike's margins. Meanwhile, the biggest name on this morning's earnings calendar is Walgreens. The drugstore chain reported a 4.5% decline in fiscal first quarter profit, missing estimates. However, Walgreens' sales were in line with analyst forecasts. Right now, the stock is set to open about 6% lower. That's the latest from Weiss Research. I'll be back after the opening bell with all the market-moving news.